Welcome back to the Deep Dive. Today, we are taking a fascinating trip into the world of FinTech. We're looking at a company that isn't just succeeding, it's completely redefining how people pay in a really unique market. The Gulf Cooperation Council, or the GCC. We're diving deep into the story of Tabby, the leader in buy now, pay later across the Gulf. And our mission today is to figure out why Tabby is, more than just another payment app. It's really a blueprint for how FinTech can work in markets with, well, completely different rules, different cultures, and different expectations than what we see in, say, London or New York.
That's it, exactly. It's a story about bridging tradition and innovation.
So you're saying they really mastered that
They
challenge?
absolutely did. What's so compelling is that Tabby popped up in a region that was, historically, very cautious about consumer credit, very slow to adopt it.
Right.
Its success isn't about forcing consumers to change. It's about adapting the global BNPL model to fit the local culture, the local financial language. They didn't just, copy and paste Klarna.
Yeah.
They built something new for the Gulf identity.
Okay, so let's unpack that. Let's set the stage, because I think we often forget just how big of a challenge Tabby was facing when it first launched. Before all this digital payment stuff took off, the e-commerce world in the Gulf had this one very non-digital hurdle.
A huge one, the culture of trust.
Exactly.
The barrier was monumental. I mean, well into the late 2010s, cash on delivery sale wasn't just an option. It was the main way people paid for things online, especially in huge markets like Saudi Arabia.
And that's wild to think about now.
It is. And it was driven by two things. First, a really deep skepticism about card security and digital payments in general. And second, this cultural habit of needing to physically see the goods, to hold them in your hand before any money changed hands.
If you contrast that with where BNPL first got big globally, you really see the scale of the problem.
Oh, absolutely.
Klarna started in Sweden, which is super high trust. Everyone has a card, very digital. Afterpay took off in Australia, where millennials were already comfortable with digital spending. Tabby walked into a market where people didn't trust digital payments and they didn't trust the idea of personal debt.
That's the core tension right there. How do you convince someone to sign up for a digital pay-in installments product when just a year earlier they wouldn't even type their credit card number into a website?
So they're solving two problems at once.
Exactly. Building trust in digital transactions itself and reframing what it means to pay over time.
But the timing here was key, right? The sources suggest that while the cultural hurdles were massive, the market was kind of primed for it, this perfect storm of readiness.
Yeah, the timing couldn't have been better. The whole region, but especially the UAE and Saudi Arabia, was going through this incredible digital transformation. You can't talk about this without mentioning the big government plans like Vision 2030 in Saudi Arabia.
That was a huge push.
A massive push. These plans were actively backing things like financial inclusion, moving away from cash. So this wasn't just, passive support. It was a top-down mandate for everyone to go digital.
And the economic stability helped.
Critically, the Gulf offered this stability that you just don't see in other fast-growing regions. I mean, unlike parts of Latin America dealing with crazy inflation, the GCC has stable currencies, high smartphone use, and all this government urgency. It was just this uniquely fertile ground for a local FinTech to sprout.
Okay, so that stability was the foundation. But the real genius seems to be how Tabby handled the cultural psychology.
Right.
This is where a foreign company might have just completely failed.
This is where it gets really interesting.
They reframed debt as budgeting.
Exactly. First, you have to understand that shopping in places like Riyadh or Dubai isn't just about buying stuff. It's tied to lifestyle, social identity, cultural rituals. It's a huge part of life. Now, traditional credit cards for a long time carried this cultural stigma. It was sometimes seen as a sign of financial trouble or, taking on unnecessary risk.
So Tabby had to avoid that.
They avoided it completely. Their genius was in the language. They never pitched themselves as a credit provider. They position themselves as a smart, transparent financial planning tool.
So it's not buy this because you can't afford it. It's buy this and manage your cash flow intelligently, even if you can afford it outright.
Precisely. The focus is always on control, on transparency. You see it in their marketing. Pay in for, interest-free, or manage your spend. It lets the Gulf consumer, who is often very financially prudent, get what they want without that psychological weight of feeling like they're in high-risk debt.
It's just smart budgeting.
It's smart budgeting, not a loan.
That completely changes why someone would use it. I mean, it's fascinating. In the West, BNPL is often about stretching a tight budget, but here you're saying it's more about convenience, flexibility, enhancing your lifestyle.
Yeah. Yes. It's about getting something now while still managing your money responsibly without waiting for your next paycheck. It's not seen as a tool you use out of desperation.
And that differentiation is just so powerful.
It is. It allowed them to get into high-end retail in a way that traditional credit cards struggled to. They won trust by respecting that deep-rooted value of fiscal responsibility.
So once they cracked that psychological code, they had to build the business. Let's talk about their merchant strategy. If shopping is about identity, you can't just partner with any online store.
No, you need the cultural gatekeepers.
What do you mean by that?
Well, the retail world there is dominated by a few very large, very powerful brands, the big mall-based retailers, the luxury names. Tabby's strategy was brilliant. They went after the most culturally influential brands first.
So quality over quantity.
Absolutely. Getting a huge Saudi department store or a major fashion chain on board wasn't just a business deal, it was a signal to every single shopper.
If they trust Tabby, I can too.
Exactly. It's a strategy you see in Asia, too. You embed yourself with the biggest, most trusted players, and suddenly you become a default, expected part of shopping.
Okay, so they got the merchants, but what about the tech? How do you manage risk when, traditional credit scoring is pretty underdeveloped in the region? Are you just flying blind?
That's a critical point. You're right. They couldn't just look up someone's FICO score. That data infrastructure just wasn't there for this kind of thing, so they had to build their own.
From scratch.
Pretty much. Their solution was to build these really intelligent risk models based on behavioral and transactional data.
So not what your bank history says, but what you do.
Exactly. They're analyzing thousands of other data points. Things like how stable your address is, how often you've shopped with a merchant before, how you behaved on your last few installments, even stuff related to your phone usage. Their system learns from how you act digitally.
And that's huge for financial inclusion, isn't it? It opens the door for so many people who might be young or new to formal credit.
It's massive. It allowed them to scale safely and give access to a whole group of consumers who were basically locked out of the traditional system. And that balance easy sign up but a smart, tough risk engine behind the scenes was key to getting regulators on their side.
Right. The regulators, the sources seem to paint a picture of them being more like partners than adversaries, which is very different from the West.
A defining difference. Regulators in the GCC, especially in Bahrain and Saudi Arabia, set up these things called FinTech sandboxes.
Which are like safe zones for testing new ideas.
That's a great way to put it. A controlled environment where a company like Tabby can test and refine their product under supervision before a wide rollout. The regulators saw BNPL not as a threat, but as a tool.
A tool to help them meet their national goals.
Yes, a tool to accelerate economic diversification and digitalization, which aligns perfectly with something like Vision 2030. And because Tabby was always compliance first, they built up that trust. It's the complete opposite of what you see in some markets where regulators get nervous and shut things down.
And we should touch on the money again. You mentioned Tabby kept raising huge amounts of investment even when other BNPL companies were struggling globally.
Yeah, and a lot of that came from regional sovereign wealth funds. That's a powerful signal. It shows that the big local investors see the Middle East not as some volatile market, but as a stable, high-growth digital economy. And that capital just let Tabby build faster and more confidently than anyone else.
So they nailed the culture, the tech, the regulations. The next step is scaling across the whole region.
Yeah.
How did they do that so smoothly when we see fintech struggle to even cross one border sometimes?
Well, the Gulf region has some inherent advantages for scaling. There's a high degree of cultural alignment between the countries, strong economic ties, and really importantly, very similar trends in digital adoption.
So it's not like going from, say, Kenya to Nigeria.
Exactly. The challenges are fundamentally different. While there are, of course, local rules you have to follow, the core consumer behavior and the government's goals are pretty consistent. Because Tabby was built for the Gulf, it feels like a natural regional solution, not some foreign product that's been awkwardly translated.
And the economic impact is real. You can actually see it.
Oh, absolutely. It's an economic accelerator. Retailers see their conversion rates go up, more people trust e-commerce. Small businesses get better cash flow. And by moving millions of people away from using cash, they're directly helping governments achieve those big national goals. They are literally changing how money moves.
So looking forward, where does a company like Tabby go from here? They dominate BNPL. What's next?
The trajectory points very clearly in one direction. the super app.
Ah, so becoming more than just payments.
Much more. The future for Tabby is likely a transition from just BNPL to a broad financial ecosystem. Like we've seen with Momo in Vietnam or PicPay in Brazil. It's the natural next step to keep growing.
Meaning they'd add things like savings accounts,
Yeah.
investing.
Precisely. You could see them adding savings tools, micro investment products, loyalty programs, maybe even financial planning features. If they pull it off, Tabby could become one of the Gulf's first true all-in-one consumer-facing fintech super apps. And that's an incredibly valuable position to be in.
So when you boil it all down, the Tabby story is really a lesson in cultural intelligence.
That's the main takeaway. FinTech success there requires so much more than just good tech or a lot of capital. It demands this deep sensitivity to cultural habits, respect for consumer psychology, and making sure you're aligned with what the entire region is trying to achieve. They didn't just copy a global model, they redesigned it for the Gulf.
So what this really means for all of us is that the future of fintech and maybe global business in general is going to be led by these adaptive, culturally intelligent companies, not these rigid, one-size-fits-all models that just ignore what makes a place unique. And I'll leave you with a final thought on that. Think about what other globally successful business models, maybe in hospitality or education or ride-sharing, would need that same level of deep cultural adaptation to really work in the GCC. Using Tabby's blueprint of reframing a core idea, debt into budgeting as a template. Thank you for diving deep with us.